Okay, imagine this. What if there was a kind of master key? Not for, like, a bank vault, but for real profound success, across pretty much any area, building something, learning a skill, even just sticking to your goals. And what if that key wasn't some super complex secret formula, but actually just mastering your own mind?
Hmm, that's a powerful thought to start with.
Yeah, and that brings us to today's deep dive. We're looking into the pretty extraordinary world of Richard Dennis, legendary trader.
Absolutely, but he
What
wasn't just about making a fortune, was he?
exactly? He kind of shattered this idea that great trading is just, innate talent. He basically proved it could be taught to
R-
pretty much anyone.
Right, regardless of their background. And that's our mission today, really, to unpack the psychology behind it, the discipline he emphasized, the core principles. We're digging into excerpts from Richard Dennis, Trading Psychology and Discipline.
And the goal here is to show you how these insights go way beyond just the trading floor.
Yeah, it's about mindset shaping outcomes.
So get ready for hopefully a bit of a shortcut to understanding that. We want you to walk away with practical stuff you can apply wherever, consistency and clear thinking really matter. Okay, so let's kick this off. What was the absolute bedrock, Dennis's foundational insight? Because it feels so much bigger than just markets.
It really is. His core belief basically was that the biggest enemy isn't the market going up or down. It's you, it's your own emotions.
Fear, greed, that sort of thing.
Exactly. Fear, greed, hope getting out of control, panic. Those are the things that really mess traders up. They derail rational decisions.
Which seems almost backward for something that looks so numbers-driven from the outside. So if the market isn't the enemy, how did he suggest fighting these, like, internal battles?
Well, that's where his famous mechanical trading systems came in.
Mechanical meaning.
Yeah.
Rule-based, like an algorithm.
Precisely. Highly structured, rule-based approaches.
Yeah.
He believed they were vital because they could bypass those destructive emotional impulses. It's about taking the emotional roller coaster out of the equation.
Right. Which reminds me of that amazing quote he had. Something like,
I always say you could publish my trading rules in a newspaper and no one would follow them.
that's the one. The key is consistency and discipline.
Yeah.
That's pretty bold.
It is, and it's such a paradox, isn't it? Sometimes the simplest rules are the hardest ones to actually stick to because your emotions, your gut are constantly screaming at you, do something different. This time it's different.
Yeah, your feelings get in the way.
And Dennis showed the real secret isn't some magic formula. It's just relentless consistency, almost boringly sticking to the plan.
So the key takeaway is really, it's not about secret info. It's just doing what you decided to do no matter what.
Exactly, sticking to your rules, through thick and thin, even when it feels wrong.
Wow. That hits home immediately.
Yeah.
I mean, think about how often your own emotions, maybe fear of messing up or getting way too excited after one small win, just completely derail your plans. Not just with money, but like anything in life.
Yeah,
It's a constant struggle, isn't it?
it really is.
Okay, now Dennis was known as a pioneer of trend following. For anyone not familiar, that's basically riding the wave, right?
Yeah.
Buying when things are going up, selling when they're going down.
Yeah, rather than trying to pinpoint the exact turning points.
So what's the psychology behind that approach?
Well, the deep psychological insight there is that trying to fight the trend, trying to predict the absolute top or bottom, that often comes from ego.
Ego. How so?
It's that human desire to be right, to feel smarter than everyone else, to call the market turns perfectly. Dennis taught something crucial. Making money is more important than being right. Let that sink in.
Making money over being right.
Yeah, you're not there to show off how smart you are. You're there to observe what the market is doing and go with it.
Okay, so if you're actively not trying to be the smartest predictor, what's in the discipline involved there? It sounds easier than it is, I bet.
Oh, definitely. The discipline point is accepting, truly accepting, that you will never buy at the absolute low or sell at the absolute high.
Never. That's tough to swallow for some.
It is,
Yeah.
because we all want that perfect timing. But trying for it just introduces guesswork and emotion. So the focus shifts. It becomes about capturing, as he called it, the middle meat of the trend, the main part of the move.
Okay, not the whole thing, just the chunky bit in the middle.
Exactly. It's about getting consistent gains from a strategy you can rely on, not chasing some elusive perfection. It means letting go of that ego.
That makes me think, how often in life do we resist the clear, practical path just because of pride? We fight the current just to make a point instead of taking the steps that would actually work better.
It's a very common human trait.
All right, this next point, this is where I think it gets really, really interesting. Risk control. Dennis was huge on this, right? controlling losses before they just blow up.
Absolutely critical. This
Oh.
was non-negotiable for him and the turtles. His rule was incredibly clear and kind of radical for its time.
What was the rule?
You risk only a tiny fixed percentage of your total capital on any single trade, like maybe 1% or 2% max.
Okay, wait. So if you have, say, $10,000 to trade with, you'd only risk $100 or $200 on one single idea.
Precisely. It sounds almost too simple, maybe even too small. But the psychological impact is enormous.
How so? Why is that specific rule so vital for your mindset?
Because if you know going in that the absolute worst outcome for this one trade is only a tiny, manageable loss relative to your whole account, it massively reduces your emotional attachment to that single trade's outcome.
Ah, I see. It stops you from panicking if it goes against you right away.
Exactly. It lets rational thinking win over that knee-jerk, fear-based reaction. You're not betting the farm on every single decision. It's like a mental safety net.
That's really powerful. And you can see the parallel, right? Like if you're starting a new project, maybe a side hustle or something creative, imagine defining upfront, okay, the most I'm willing to risk here in time, money, whatever, is this small, acceptable amount. How much anxiety would that remove?
A huge amount. It frees you up to make better decisions because you're not terrified of catastrophic failure on that one thing.
Okay, so risk control is key. But losses do happen. They're inevitable, as you said. How did Dennis teach his students, the famous turtles, to actually handle them? Because that's where so many people just crumble.
Yeah, this is crucial. He didn't just say losses are natural. He hammered home that they are an absolutely essential, unavoidable part of the whole process. You will have losing trades, period. So for him and the turtles, emotional resilience wasn't just like a nice bonus. It was a basic requirement. You couldn't succeed without it.
You had to be able to take a hit.
Mentally, yes. You had to be able to lose without losing your cool or abandoning your strategy.
So what's a practical mindset tip there? How do you deal with those losses?
Don't dwell. Seriously. Evaluate them, sure, but clinically, like a scientist looking at data.
Understand what happened.
Right. Learn whatever lesson there is objectively,
Mm-hmm.
and then move on
Yeah.
immediately. He really pushed this idea of a next trade mentality.
Next trade mentality. Meaning,
Meaning your focus is always on executing the next trade correctly, according to your rules, without being weighed down by what happened on the last one, or the one before that. Your last failure doesn't define your next action.
that is so hard for most people, I think. We carry baggage from setbacks, letting a past failure dictate the next move, maybe even stopping us from trying again, applying that next move thinking to life's failures. Wow, that's a big one.
It is, but absolutely vital for long-term success and anything uncertain.
Which leads perfectly to the next point. What happens when it's not just one loss, but a string of them? A drawdown, right? When your capital shrinks for a period.
Yeah, that's the real test.
Because that's when most people would probably panic and just ditch their system entirely. How did Dennis tackle that?
This is where unwavering belief in your system comes in. Belief has to be stronger than short-term results. Dennis insisted on it. He knew systems have rough patches. If the system itself was sound and proven over time, you had to stick with it.
And the Turtles actually experienced this. They had losing streaks.
Oh, absolutely. They faced significant drawdowns. Some lost confidence. But the ones who disciplined themselves, who stuck to the rules despite the losses, trusting the long-term edge, those were the ones who eventually made millions. Their faith was rewarded.
So it's not just about handling one loss. It's about the commitment through those tough stretches.
Wow.
What's the bigger psychological principle there for long-term goals?
It's basically endurance and belief. Those two things are absolutely essential to survive the inevitable volatility in any long journey and actually reap the rewards. If you jump ship the minute the waters get choppy, you'll never reach the destination. You have to ride out the storms.
Man, that resonates.
Yeah.
Think about any big goal: getting fit, building a career, finishing a huge project. How critical is that sustained belief when things just aren't going well in the short term?
It's everything. It's often the only difference between succeeding and giving up halfway.
Okay, so we've talked about handling losses. What about the flip side? After a winning streak, I imagine it's easy to feel like a genius then.
Definitely. And Dennis warned about that just as strongly. Self-belief is good, you need it to persist. But overconfidence after winning, that's incredibly dangerous.
What I dangerous? Isn't confidence good?
It is, but unchecked, it leads to recklessness. You start thinking you can't lose, that you are a genius. And that's usually right before people make their biggest, dumbest mistakes. They abandon the very rules that got them there.
Okay, so how do you find that balance? Confident enough to act, but humble enough not to blow it all.
By sticking rigidly to your system, that's the anchor. You don't suddenly start taking massive risks just because you won a few times. You don't deviate from the rules because you feel invincible. The key rule, really, that covers everything is follow the system regardless of how you feel.
Whether you feel scared after losses.
Or euphoric after wins. The system is the guide, not your emotions. Applies just as much in good times as in bad.
That's such a great point. We often celebrate wins by, like, throwing caution to the wind, right? Taking bigger risks.
Yeah, reward seeking goes into overdrive.
But true disciplined success means celebrating, sure, but not letting it make you overconfident or careless, whether that's in trading or business or anything else.
Maintain humility. Always.
Now, something that fascinates me is that Dennis's incredible success and the success of the turtles, it wasn't based on some ridiculously complicated secret sauce strategy, was it?
Not at all. You're spot on. His success was built on surprisingly simple, often trend-following strategies. The key was executing them flawlessly.
So why do so many people, not just traders, seem to gravitate towards complexity?
That's a great psychological question. Often complexity makes people feel more in control. It feels smarter, like you have some special insight.
Like you've cracked a code others haven't?
Exactly. But in reality, Dennis knew that simplicity brings clarity. It reduces mental load, cuts down on stress, and actually improves execution because there are fewer points of failure or hesitation, less noise, more signal, more effective action.
That's a real challenge to think about for
Yeah,
you
so
listening too. Where in your own life might you be overcomplicating things? Adding layers, thinking it makes you look smarter or feel more in control, when actually it's just hindering clarity and stopping you from executing consistently.
it's a worthwhile question for sure.
Okay, so we've walked through these powerful principles from Dennis's world. Let's try and crystallize this. What does it all mean for you listening right now, way beyond trading?
Yeah, let's boil it down. The universality is key. First, discipline. Rules over emotions. Every single time. That's the foundation.
Got it. Rules, emotions.
Second, trend following, psychologically speaking. Ride the momentum that exists. Don't fight reality trying to predict perfect turns. Capture the main move.
Okay, go with the flow. Don't fight the tide just for ego.
Third, risk management. Small, consistent, defined risks. That's how you survive and thrive long-term in anything.
Small bets. Stay in the game.
Fourth, handling losses. Detach emotionally. Learn clinically. And immediately adopt that next move mentality. Don't get bogged down.
Learn. Don't mourn. Focus forward.
Fifth, belief in your system. Trust your long-term strategy over those scary short-term dips. Endurance wins.
Stay the course if the plan is sound.
Sixth, avoid overconfidence. Stay humble, especially after success. Don't let wins make you reckless. Stick to the rules.
Humility keeps you grounded.
And finally, seventh, keep it simple. Complexity often kills consistency. Simple plans, executed flawlessly, are incredibly powerful.
Simplicity enables execution. Wow. Richard Dennis really proved something profound, didn't he? That mindset and discipline can genuinely trump raw talent or trying to predict the future. That's incredibly empowering for anyone.
It absolutely is, because it means success in systematic endeavors isn't just for the gifted. Applying these psychological principles, that can boost your consistency, your results, whether you're a novice or a pro. In trading, sure, but in any disciplined pursuit. It's less about being the smartest person in the room and more about being the most disciplined and resilient.
What a fascinating journey through his ideas. We've seen how Richard Dennis's legacy isn't just about money. It's about understanding our own minds and the almost unbelievable power of consistent, disciplined action.
Yeah, it truly is. So here's maybe a final thought for you to chew on. If success, like Dennis showed, really hinges on simple rules followed consistently, what system, what set of rules are you currently following in your own life? Maybe intentionally, maybe unintentionally. Outside of just finances, think health, relationships, career.
And maybe the tougher question, how disciplined are you really about sticking to those rules? It's worth taking a moment, maybe this week, to reflect. What personal rules or principles could you adopt, or maybe strengthen, to get more consistency, more long-term success in whatever you're aiming for?